Hey there, traders. Todd Gordon here with TradingAnalysis.com and Inside Edge Capital. Hope you're well. Happy New Year. Two things I want to do in this video. One, update you on the gold short that I'm in from the last video update that you may have seen. If you didn't, we're short gold. And second, I want to show you a position in Meta. I'll show you the live position and show you what we're planning to do going forward. All right, so let's jump in. Here we go. We're going to share this screen. And okay, here's the gold futures chart on the daily. And I'm wondering, I won't go into too much of it. You should be able to access the last video as to the reasons we're short gold, but very quickly, wondering if we have a C wave down, that red guy in the circle C, to complete larger degree 4 into the highlighted support zone. So within red C, which we're thinking is a 5-wave motive impulsive structure that would complete an ABC zigzag, wondering if we have wave 3 down. So off the daily, let's go down to a 2-hour chart. And what we left our subscribers with right around the new year was this cluster of resistance here on the 2-hour chart. The gold market tried to break down through 2,600 and then mounted a rally from December 31st up to January 3rd, right at midnight, and wondering if this printed a smaller 535 ABC zigzag. The equality of A and C, which I'll hide the red there just for clarity's sake. Green A and green C equality is there at 2667, which we got through it, but not by a big amount. And then that was reinforced by the 50% price retracement of the drop from December 11th to December 18th. Okay, so good little zone of resistance. We've held resistance so far, and we're starting to potentially move lower. So I'm looking to hold that short gold. And as I said, there's a lot of macro influences there that would boost a lower gold price, but we'll leave that for now. So if we could break through the uptrend support about 2619, may be able to get that blue 3 of red C going, which would potentially bring you down into this zone here around 2,500. Okay, I know there's a lot going on in that chart. Okay, so over to Meta. Let's do this. Okay, so Meta, I'm going to show you the live position we're in. In fact, it's right down here. It's a position we've had for a while. I've been adding to the position, and I'll show you the specifics. But first, let's look at the longer-term wave count. So Meta, long-term, we had a long rally into 2021, and then Meta got hammered from 389 down to sub 100 as Zuckerberg started really spending a lot on the AI build out. And he was one of the first large cap growth companies to kind of get bloodied through the wall of the AI infrastructure spend that so many companies are doing now, and that's why NVIDIA is printing massive profits. And we can actually just take a look at that here on this platform I use called Deep View. So if you look at where Meta was in terms of earnings, EPS for the year, they're making $10 collectively in 2020, 2021, they went up to 13. Then they started spending a bunch. They went down to 983, which is a 28% year-over-year drop in EPS. And if you look at the revenues, look, 86 or 85 billion top line, 117, 116, 134. The revenues didn't go down, their spend went way up. Right, so that corresponds to the 2022 sell-off. Then they righted the ship. They're continuing to spend, but the profitability went up because they went into this year of efficiency, so on and so forth. Back to $14.87 for 2024. They've yet to report the last quarter of 2024, but on track for $22 a share. So you can see, that EPS year over year certainly matches up with the price chart that is right here. Okay, so where are we longer term? I'd like to focus on the move up that we've seen following the 2022 low. Okay, I don't have a huge degree of confidence in this wave count. I think the uptrend for now is unmistakable. I think we may have a green minor 1, 2. 3, which 3 is shorter than 1, and of course that's going to have implications for the expected distance of wave 5 versus 3. If 1's longer than 3, 5 must be shorter than 3, and that's going to be the case while Meta is, let me see if I can find 5v3 right there. While Meta is below 857 as we trade 624, this count is valid. Okay. I'm going to remain long Meta for now. If by chance we were to be able to rally another $220, $30 and go through 857, I'll be wrong on the wave count, but we will have a lot more money in our account, and that's okay. That's my difference of how I apply the wave theory in terms of, being very, I would say, academic with it, and taking a lot of, I would say, a lot of focus to get the exact right wave count. I tend to be a trader, and I like to look at multiple scenarios with a big degree of respect for the trend and look for where I may be wrong and manage the position accordingly. So it's an intricate conversation that we can have in depth later. But back to the wave count. So if this is accurate, I'm going to start to fill in the lower degrees here within green 1 through 5. Off of the weekly, I'm going to squeeze down to the daily. And wave 1 was, as I said, very long. I have this as 1, 2, 3, 4 into February 23, which is coming up on 2 years ago. And then green 2 I have as A, B, C. That would be a running flat. Running flat set up a very strong motive wave following that 1, 2, 3, 4, 5. And then this is interesting. I have this from April of 24 as a long triangle completing in August of 24. That was the big summer tech sell-off. And now, which we arrive at the point of the video, is I think, and I have some concerns that post-triangle thrust, with 3 being shorter than 1, 5 being a 61% relationship compared to 3 at 670, which is not that far away from these highs right here at 641. I was wondering, is this 5 waves and we need to get out and take profits? Okay. Let me do that one more time to the side so they don't connect. So it's a little motive wave trick. 1, 2, 3, 4. And I was wondering if that's it. Okay. And it would be prudent to take some of the profits here in Meta. Okay. Well, if we look at this, I'll show you the exact position of trade. So I'm long 125 shares. Started buying this thing in September 22, added in April 23, added in April of 23 again, and then June 11th, 2024. These are the exact trades, real money. I also hold this stock in our active ops portfolio, which I'm going to share with you right here. Entry at $515 on August 28th. This is an active ops portfolio that we run for members at Trading Analysis. So our latest entry was at 515 in Meta. Okay. So 515 back in August is going to be right here, right about here. Yep. And then we went into sell-off. So if this is 5 waves, I can't help but watch how strong this move has been since we rolled into 2025. Okay, so keep that in mind, that we have potentially 5 waves up, and if that's the case, we should start to see something quite significant in terms of an ABC pullback, and I want to take some profits on this. Okay, but the strength that we're seeing, I think, is pretty unmistakable right now, and I'll give you a little trick that I like to use. I'm going to go down to the 195 chart, which is a half-day chart. Okay, you take your 390 minutes in the stock market day, cut it in half, and that's what it is. No, it's 6.5 hours times 60, so I think that's 390. You can do the math. Anyways, the 195 is the half-day chart. So if we look at the retracement of the sell-off from mid-December down to December 20th, the line in the sand I like to use as the square root of the golden ratio, which is 0.618. So if you take the square root of 0.618, you're going to get 786. So I find when a 618 retracement does not hold resistance in the case of a potential new downtrend, the 786 tends to be the exhaustion point, whether it's an underlying structure in the market or it's a stop run move through 618. Whatever the case, if a move does not reverse at the 786, which is the square root of 0.618, I find the move tends to move up and make new highs. The 1272, this is a bigger discussion. The 1272 winds up being the square root of 1.618, your golden ratio. So that tends to be a nice target. But more importantly, and the point of this video and how I'm handling this position is if the 786 is broken, like it looks like it is right now with 15 minutes to go in today's session, it suggests we make new highs. It also suggests that the very obvious wave count that I addressed here is not likely, and there's something else going on in here. I don't know what it is yet. I don't think I can know, but I do know the trend is up. I do know technology is coming out of the gate pretty strong for this year, so I'm going to hold. And if we get up into that 1272 level I almost said NVIDIA, in Meta at 655, I'm going to be very aggressively trailing the stops behind us for the entirety of the position, then await and see if we can find more information as to what the wave count is. Okay, so it's a delicate balance between, rigorous, can't say it, rigorous, you know what I'm trying to say. Apply the Elliott Wave principle to real life positions. It's a very delicate balance that you have to experiment and find what you're comfortable with. So you can't always go into a position knowing exactly what the wave count is. You can have several different scenarios laid out, not be entirely sure, but be diligent in terms of managing the position, and you can be profitable that way. Let me try it one more time. Rigor, can't say it. I'm embarrassing. All right. Happy New Year. I think it's going to be a great year, but it's going to be filled with volatility and opportunities. So I'm going to go work on my pronunciation. All right. See you guys. Hope that helps. Take care.